Okay, so today's Sunday, September 14th, and this is like the first time, and I believe since 2023, where we haven't had any pullback at all, really, like substantial pullback in August and September. I remember in 2023, we had a large pullback from the basically beginning of August all the way to the end of October. This whole period of time, we saw a pullback of about 10% over 3 months, um, which fell in line with the seasonality, right? Seasonally, the weakest months of the year is August to October. In 2024, we saw weak seasonality again. We saw this pullback end of July. August, we had a pullback going into September, and we didn't see too much after that, but it was very choppy throughout this period of time. And this year, we've really just had one kind of dip, like a 1 day drop of 3%, and another kind of just choppiness going forward. So it's kind of, I don't know, I guess refreshing to see like something new, even though maybe a little bit frustrating too, because I know we'll probably all have some cash on the sidelines waiting to invest on a pullback, or if you're a trader, you're like waiting for that rug to be pulled out from under you at like any given moment. It's like, people, just because the market's grinding higher doesn't mean it's easy to make money. It's never easy. It takes a lot of skill and understanding. So I guess the first thing I'll talk about is the seasonality. If you guys aren't familiar, in my Discord, I do have it pinned under market discussion. I'll go ahead and pull that up. And I'll check if you guys can see my screen if I do that, which you don't. Let me adjust um, my screen. Okay, so pinned messages, come down to seasonality. There might be a new chart now because this is the 20-year range ending in 2023. Um, there might be one for 2024, but anyways, basically August to October, you just see pullback, rise, pullback. It's very choppy. It's not like July, where usually July is one of the best months of the year, or like February when there's a drop, or like March to April, or the end of the year, or the Santa Claus rally, as they call it, right? So we always come into August, September, October expecting volatility and choppiness, a much harder trading environment because of that. Um, and so I still think we're going to see a pullback before the end of October. Um, just no one knows when, but I just, probability wise, that's probably going to happen, especially with how far the market has run up, right? This market has basically, if I go to the weekly chart, has just kind of gone up in a straight line really since the bottom we saw 36%, which is really impressive. Um, and before I go into like what happens when the Feds cut rates, I kind of was looking at the monthly chart. And I was noticing a very interesting pattern on the S&P 500. I was seeing that like on the monthly candles, usually when there's five green candles in a row, I just see like a red one, like a pullback. And I saw it here from November 2023 until March 2024, and then we got a pullback in April. This one was longer than 5 months, but 5 months minimum. This one was from the COVID bottom, and like so on and so forth. This one was in September 2017, and right now we're in our fifth monthly candle. So I don't know, like that could mean in October we pull back. That could mean, we reverse here, or just something interesting I saw. Um, just another thing telling us that a pullback is coming, right? Um, I just wanted to share that was interesting. And for the interest rate cuts, I know a lot of people are kind of worried about it. Like, okay, yeah, the rate cuts are priced in. The market knows they're going to cut rates on Wednesday. Um, So I went ahead and I went on AI and I asked it, I said, tell me the dates when the US cut interest rates while unemployment was still below 5%, right? Because the context behind the interest rate cuts is what matters, right? It's not like, oh, they cut rates, therefore market goes up or down. It's more like, why do they cut rates? Did they cut rates because like a recession is happening and they want to like minimize it and try to get out of it and stimulate the economy? Or are they cutting rates for other reasons like, economy is fine, they're worried about it going into recession, they're trying to be preemptive. So those things matter. So I went ahead and marked it on this chart, or I thought I did. Hmm. Okay, then we'll look at the dates on their own. It was September 1998, right? So September 1998. This was during the dot-com bubble, right? This insane rally, basically, that lasted from 1990 for 5 years, basically, with the 223% rally in the markets. So in 1998, they cut rates in September. And if we look at the weekly chart right here, we'll see that the market was already dropping going into the rate cuts, right? So this is a different environment than what we have now, right? We haven't dropped or anything like that yet. So I don't think that's a good reference point. October, same thing, and November 1998. So they did 3 rate cuts in 1998. The next time they did rate cuts while unemployment was low was in 2001. And in 2001, we were in the middle of a recession from the dot-com bubble. So again, those days, and from January 2001 until August 2001, all those rate cuts also don't match our current situation. We're not in a recession. The market hasn't topped out. We're not seeing a big bear market, you know? And so if I keep going, I see September 18th, 2019 and October 2019. And that was during Trump's first presidency. And I believe they did cut rates there following Trump's tariffs. It's kind of a more similar situation to what we have now. Trump did tariffs, they're worried about inflation, um, but unemployment was still good, right? Employment was still good at good levels, the economy was fine, and that sounds a lot similar to what we have now. And so that was in 2019, July and September. So if I go to 2019 September, and I'll switch to the daily chart for this. September 2019. Okay. September 18th, right there. And October 30th, 2019, right there. Similar to what we're going to experience. I think this is going to do the same playbook. They're going to cut rates twice this year, probably once in September and then October. And what we see here is that the market did end up pulling back after this rate cut. The market did recover from that tariff drop. We'd never had this pullback that tested, this recovery. We never had the pullback that tested all-time highs. We just literally just did this instead, which increases the probability of a pullback, and unfortunately does increase the probability of a larger pullback too. But based off that, I do think we might see something like this. This was a 5% pullback, so pretty minor, a healthy pullback, and it's something that you would expect to see. What would cause that pullback? I mean, does it really matter? Like, the Feds might say something like, oh, unemployment's rising, or the risk of employment, blah, 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 is higher than it was before. Whatever, it doesn't matter. Like, it's not our job to be economists. It's our job to try to identify what institutions are doing and to follow them because they're smart money. They're the ones that have all the money and the research and all the teams, and they sit down and talk with CEOs and have meetings with managers, right? And they talk with all the like the FOMC team and stuff like that. We don't have that access to that information, right? But we do have access to technicals, and the technicals, what they're supposed to be, is a measure of what institutions are doing in real time, right? So It's not bad to kind of understand kind of what's going on in the background, but like unemployment's still low. If I open the unemployment chart, which TradingView is awesome for having stuff like this, right? Let me switch to percentage. Yeah, still below 5%, which is up here. I mean, lowest levels, like very low levels historically, you know? So according to this, and inflation is still high, but the Feds really do believe it's transitory, and they feel like because they've kept rates high, it reduces and mitigates the risk of inflation continuing to rise with them cutting rates because unemployment and the labor market is weakening. So it's balancing that out. Um, so yeah, and there was actually one more time where they did cut rates with the unemployment rate being good, which was last year in 2024. Um, and that was over here, September 18th, 2024. The market gapped up after, you know. So, but again, we saw a pullback already here. We saw a pullback here. We saw a pullback here. So a little bit different than what we have, but in general, I don't think interest rate cuts is going to cause some sort of bear market. I just think it's going to cause some sort of pullback. And during that pullback, you have to ignore any kind of bad news because what they always do back over here during the tariff drop, like Goldman Sachs, JP Morgan, oh, recession probability has spiked to like 80%, 85%, 90%. And look, the market rallied 30% after, so like you have to ignore those things and you have to stick with the technicals and the fundamentals from the government. Whether you trust the numbers or not, that's what the institutions use. All right, when they talk to them, that's the numbers they get. Sure, they might get maybe more detailed numbers, but in general, that's what they have to go off of. So we have to go off of that too. Unemployment is still good. Inflation, in their eyes, is still manageable. They're going to cut rates. You feel it, right? You also look around you, like you talk to people, and people can't afford homes. People are struggling with the groceries, like struggling to save money every month. It's harder to do that. People are having a harder time finding jobs. So you do see the effect of the higher interest rates. So, but is it like, you know, people are losing their homes and jobs? Like, no, it's not like that yet. Um, Hopefully that makes sense. That's kind of like the fundamental backdrop we have. It's really a unique situation. Like everyone I talk to who's been in the markets for a lot longer than I have said they have never seen anything like this, where like everything is so expensive and people can't find jobs or buy homes, yet the market and the real estate market is just booming all-time highs, like, every other month. But that's what it is. And we have to trade. This is not my line, but we have to trade what we see, not what we think. So with that, I guess I could. They don't have any questions so far. I could ask that. I'll check the chat too. Okay, no questions in chat. If not, then I'll just keep going. Fundamentally, sorry, that was fundamentals. So technicals, I always start off by looking at a VWAP-Q. I always say that. A VWAP-Q. So on the daily chart, there's an indicator on TradingView called VWAP, volume weighted average price. People use it for day trading a lot, but people don't know you can also use it for market analysis on the daily chart. Basically, you anchor it to the beginning of each quarter to analyze the market indices. And it's a pretty good, reliable indicator that a lot of people use, including institutions, to kind of judge what the fair value of an asset is at a certain time. So just to kind of showcase it, if I go back and pin this VWAP to the beginning of each quarter, like January, and then April, and then I'll even do maybe over here, July 1st, 2024. July 1st, all right? Basically, the way you read this is when price is trading above it, bulls are in control. We're in a short-term bullish bias. When price closes below it, we've entered a bearish bias. You expect prices to move down in the short term. In 2024, price broke down. It tested it once, dropped, tested it twice, never closed above it. You can see the candle never closed above it. That was a good signal to stay short. If you were short, stay on the sidelines, wait for maybe another drop or so to get in on your investments. If I keep going, this was January 2025, pullback, recovered. Okay, that's bullish. Tested it, recovered, bullish, stay long, broke down below it. Okay, start to get cautious. We might start seeing further downside, and we do. And you can see again, like this type of reaction on these indicators just proves to you the institutions use it. Like it's so clear cut, right? There's price never closed below it. It was tested, tested, and there's no choppiness to it. I mean, sometimes there is, of course, but like for the most part, it's one of the cleaner indicators I've seen. And so I really do love using it, So going back to current times, like we tested it, held it, tested it, held it. All right. Boom, we closed below it. This was August 1st. I remember saying like, okay, like this is one sign, that the market might start pulling back, and we recovered it the very next day. And since then, we have stayed above it. So all this dip and this dip never went short. You should have never went short. You should have never done anything. You could have maybe bought the dip, but based off this indicator, you would have stayed with a bullish or neutral short-term bias. So as far as that goes, we're still above it. And the next one won't plot until the October 1st, right? So we still have time. So if the market does pull back here, the first level I see it going down to would be a VWAP, which is about a 4% drop. Besides that, on the longer term scale, you use the 50-day moving average, which is my blue one, and the 150-day, which is my green one. And this is a very, very reliable indication of a long-term trend. And I have an article on it on Market Manual. And so basically, when the 50 crosses below the 150 and they both slope down 10 degrees, and you can do that using the trend angle on TradingView. Just, connect it where you see it might be steep. They both 10 degrees. That signals a longer term downtrend, and it will not reverse. It will stay that way until the indication reverses down here. So 50 goes above the 150, and they both slope up 10 degrees or more. So in 2022, that was very reliable. When this happened, and this confirmed a longer term bull market, and right after that, over here, all the regional banks were failing, and there was a lot of fear. Oh, we're going to go lower, we're going to go lower. If you ignored the news, I mean, that was important news for sure. You have to be cautious. You don't just go all in, right? Because unexpected news does take precedence over technicals, right? Because no one expects it. But in the back of your mind, you're like, well, let's see how it plays out. But as of right now, institutions are buying enough so that 50, 150 moving averages of price is sloping upwards, right? So I'm going to buy in here and then wait and see what happens. Okay, regional banks got resolved. Now you can start going in, and that stays the same until the reverse happens. Now over here, that's why it's really important to measure the trend angle on that SMA. See the 50 cross below, but never at one point did the 150 start sloping 10 degrees or more, right? If even like maybe the most was 5 degrees or so. And I was waiting for that, and it never happened. And so we crossed back above it, and I stayed neutral in the long term just in case, and waiting for this to slope up 10 degrees, and eventually it did. And I think it was somewhere around here. Forget where it was, but so this long-term uptrend is still intact, basically is my point. So long term, I'm still bullish. Until that changes, I'm going to be bullish. In the short term, I'm neutral just because of what we talked about, seasonality and interest rate cuts. If you're worried about, if you are holding a lot of trades, you're worried about the risk, what I'm going to do is I'm probably going to be closing any positions that I feel are too risky for me on Wednesday morning or before Wednesday, because Wednesday is the FOMC, and the FOMC sometimes tends to have big days. Like I remember I was in Mammoth and I was on a snowboard trip and then my Discord was blowing up and people were texting me like, "Oh my God." And I was like, "Man, like I'm on vacation, I'm trying to enjoy that thing, man." And the FOMC meeting, we had this large red candle, 3% drop in one day. So if that could happen, no one knows. I don't know what's going to happen and you don't either. But it could. And so you have to prepare for that. If that does happen, how much money are you going to lose? How many positions are you going to be assigned on? Can you sell covered calls on those positions if you get assigned? Are you going to be able to stop out in time? If you are not comfortable with those scenarios, you should close your positions, in my opinion, before. So that's kind of my read on the market right now. I told you what support level would be really, the first one we could see pulled back to. We've seen how the market reacts to interest rate cuts in the past, similar to situations like now. And yeah, I kind of just went over like my broader view on the market. And the next 5 minutes, I'll just talk about some trading stuff, and then the last 30 minutes we'll do like Q&A and everything. But any questions so far? All right, cool. I think that means I'm explaining well. Trading wise, so I'm sure as a lot of you know, I am planning on basically adding a paywall to this Discord. I feel like I've had this Discord free for like over a year, and I wanted to do that because I feel like I provide valuable information, and if people feel that way and they feel like it's good, that tells me like, okay, like, I have something of value here. I spend a lot of time on this stuff. And obviously, my time is valuable to me. And so if I want to keep doing it consistently, I feel like having compensation for it makes a lot of sense. And also, sometimes I get like just weird people in here, and that also will definitely help filter out those people and keep the Discord, nice. Um, but I was thinking about like, my plan is basically I'm going to create a new server. It's going to be through WAP, and I really nailed down exactly what I'm going to be offering to make it worth it. So these live streams, I definitely want to do them very consistently because I have not been doing it because I mean, Discord's free. Didn't really have like a big motivation to do it every week. But if I'm going to be charging you guys and you guys want I want to make sure you guys feel like you're getting your money's worth out of me. So that's something I want to do, like a weekly um, live streams like this that we can discuss. And as I was going through this, I was seeing that like there's a lot of uh, like stuff on like liability for financial advice because I'm not a licensed financial advisor, right? And the swing signals I do, like, you know, could be definitely looked at as financial advice. So I can't do that stuff. So I was thinking like, okay, how am I going to provide you guys value in trading? And I realized that I currently have my own indicator that I've coded myself. I spent maybe a year or so working on and really honing it down, and I use it for everything, right? So on all my option selling, that's definitely a checklist item I use. For my swing signals, that's a big part of them, and I'll show them here. I'm going to call them the trend cycle indicator, right? And you might have seen them in my daily market analysis. I used to call them, buy and sell signals, but I feel like a more appropriate term would be like a bullish cycle or bearish cycle because this really tries to help you determine the current trend. Is it a bullish trend or is it a bearish trend? Is it a bullish cycle or bearish cycle? I'll turn everything else off so you can see them. And I want to provide access to this indicator as part of the new Discord. That way you guys can use them and apply them to your own trading too. You don't have to just follow or copy nothing. Like you can learn it on your own. And I really like these, and they're so like flexible. You can use them for any kind of trading, right? So for option selling, for example, like, I don't know, I'll go to NVIDIA. Like, NVIDIA popped the bullish cycle from April 14th all the way until August 20th. All this time here, if you were bullish NVIDIA and you wanted to wheel it, this gives you some confidence. I'm going to keep wheeling, I'm going to keep wheeling until I see this. And when you start seeing this and like the cycles start chopping, okay, this is probably not a good time to sell options on it. Or like, for example, like if you want to take directional swing trades, um, lately what I've been trying to work on for my own trading system, different than the swing signals, is using ATR. So on TradingView, you can go on ATR bands. Actually, I think it's called ATR Stop Loss Finder. I was using this one and I was like, okay. Like if I go on the 30-minute chart, if I want to take shorter swing trades, I see that there's a bullish cycle here. I look at what ATR says the target price could be for a profit target and stop loss, and I take the trade. And usually these trades last, sometimes they're a day trade, or sometimes they're an overnight or a couple day swing trade. But, I've been trying to use my indicator for trades like that. And so I want to provide that. I think that would be really good value. I think that would really help a lot of people because it's very reliable. And it's helped me a lot. And I'm very transparent. I post all my trades. So even the losing ones, even as much as it pisses me off, like I wanted to be as transparent as possible. So yeah, just wanted to kind of mention that before we go into Q&A and stuff like that. But that's something you guys can be looking forward to in the future, and you guys can play around with. Any questions on that? Okay, we can do some Q&A and some discussion. So go for it. If you guys like want to talk about anything or you guys want to share something or have any questions, you can go for it. If you want me to like look at a chart, if you're curious on a chart, I can analyze it. If you're curious on, I don't know, like a trade I've done or like why I took a trade, now's the time you can ask me. If I don't get any questions, I'll just go ahead and just show the trades I've been doing, what I've been looking at. But I just want to give you guys a chance to go ahead. And you can type in the chat too. Of course, you don't have to talk. I have the chat open, so you can always do that. Okay, one question. I only see long signals on the indicator. Does it show a bear trend as well? Yes. So the red arrows are the bear cycle indicators. Generally speaking, the market, right? What does the market do? It always goes up, right? So generally speaking, the bullish cycle indicator is going to be much, much more consistent during bull markets, of course. The bear market indicators are going to be, of course, much more consistent during bear markets. So if I go to SPY, I go to 2022, right? And let's put on the SMAs. We see that, we broke down below all the major moving averages, the 200, the 200, they're all starting to like flatten out or slope down. And you see this bear cycle. So, okay, you can start taking short trades here. If you want to be more conservative, you can wait for that confirmation, right? You see the confirmation and you get this bear cycle, boom, you can be very aggressive here. Okay, every single indication is telling me we're going to see lower lows. So I expect that we're going to be seeing a lower low below this one. So you take a short, and the profit target, it's up to you. You can use ATR. ATR is a great way to use profit targets. You can do it by like risk reward. I want to risk $100. I want a 2-to-1, so I want to make 200 and set your profit target there. There's many ways you could do it. But yeah. But generally speaking, I will say most of the time we're in bull markets, so most of the time the bullish cycles are going to be a lot more reliable. So yeah, you could see here, May 2023, that was good. Even some pullback sometimes it does pretty good. Just depends. So yeah. Next question. SMCI chart analysis. Sure. SMCI. So SMCI, because my trading style is a bit more conservative, and I mean, it's all perspective, right? But to me, I look at the fundamentals before I decide whether to trade a company. And I know SMCI, although it is part of the AI space and it has a great uh, market performance lately, I know they had that whole accounting stuff going on, the shady accounting stuff. Oh, small screen. Sorry. I don't know how to make the screen bigger. Maybe I just zoom in. Um, and so I don't know if that's been resolved or not, but ever since that happened, I kind of like took it off my watch list. So fundamentally, I don't really know. My feeling is still that it's not reliable to invest in or even trade because if you option sell, okay, cool. If you option sell, there's always a risk of getting assigned, right? And the risk with assignment is if you don't pick the right stock and it drops, you're bag holding. And then at a certain point, you can't sell covered calls either, so you can't reduce your cost basis, and you're just completely holding that cash. I mean that position. So that's why I find it really important to make sure the fundamentals are good too. But regardless, SMCI, what I see first of all is right away the 50 and it's above the 150 and it's sloping up again. That is telling me that's confirming a new long-term uptrend. So I'm just going to make sure and measure that trend angle here. I mean, that's definitely, yeah, 10 degrees. That's good. That's a really good sign. We dropped and tested the 200 day and it held it very nicely, like very nicely over here. Just wicks buying it up, turn on volume. I was expecting to see higher than average volume, which we do on that test, and then higher volume as we also go up. Um, that concept is called VPA, volume price analysis. There's a book by Anna Cooling about that, which is really good. I'll probably make a market manual article on that too. So I can briefly talk about it, but it's probably the least lagging way to do technical analysis is VPA, right? So price action, you see what price is doing and reacting to to a level where you believe there's supply or demand. The 200-day moving average is a very common, supply or demand area, and we're seeing it react. Comes down to it, wicks up. Wicks mean that price during the day was trading here, and before the end of the day, buyers bought it up and closed it above that level. So buyers bought at 200, bought at 200, bought at 200, bought, and then finally they probably exhausted all the sellers, and the buyers there's only buyers left. So to me, that's two things that are bullish. So long term, held the 200, VPA is good, volume going up as price goes up, that's a good sign. And of course, we have my trend cycle indicator, also plotting good thing, a bullish cycle coming up. So to me, looks bullish. Of course, the caveat is we're in a weak market seasonality period, and we have the rate cuts on Wednesday. So you have to account then to if you want to trade the stock, you have to know Wednesday we could see a big drop or pump. You're going to see something happen, or maybe not. But you have to account for each scenario. And then when you account for each scenario, I mean, this might sound snowflakey, I don't know, but like this is very important to me is see how you feel about it. How do you feel when you look at each scenario and how much money you're risking? You have to be comfortable. You have to be able to sleep at night when you take trades. Otherwise, you're going to make mistakes. You're going to see a drop or a pump. It's going to make you more emotional, and it's just going to cloud your judgment. It's like anything in life, Humans are emotional creatures, and I think we have to accept that. So that's kind of my read on SMCI. Um, do you base any of your strike selections on deltas or mostly key technical levels? That's actually a really good question. I lately have been doing it on key technical levels. I used to do like a zero point 0.2 delta, like on average, or zero point 0.3 or something like that. And like, Theta Gang on Reddit, it's like 30 to 45 DTE. I used to do that, and like that's fine. you know, but I just felt like for me, I was just way more comfortable assuming assignment. And I was like, okay, if I'm going to assume assignment, where would I want to be assigned? I'd want to be assigned like at a really good technical level. Sometimes that's a delta like at the money, or sometimes it's like a 0.08 delta. It just depends, right? Like on SMCI, if I was seeing this and I was really bullish on SMCI, yeah, I could have sold the 40 or whatever it is over here, 39. Yeah, the 40, 39 CSP and get assigned here, or maybe not take assignment if it pumps, or like on hymns. Hymns is a great example. Like I have been seeing, I made a post about it too on After Hour, but hymns look like it's in a Wyckoff range, which is great. That makes it much easier to kind of read the market. So let me just do this. If you guys aren't familiar with Wyckoff, do have an article on that market manual too. It's basically understanding consolidation ranges and why consolidation happens. Consolidation happens because institutions accumulate and distribute shares, and market makers too. Like market makers are like Costco. They have like a warehouse of shares, and their job is to provide liquidity to retail and institutions. And so they don't have infinite stock. Like if and like they're gonna run out of Nvidia shares at some point to sell, they have to restock. They're not gonna restock at all-time highs, right? They're gonna restock at a discount, and then they're gonna sell to us at all-time highs. And so that's kind of like the idea of it, right? So when you see consolidation, it just means institutions and market makers have probably run out of stock, and they want it to restock before moving higher, or they feel like the valuations have stretched, the risk to reward and the projection of return on that stock at these levels have decreased, and they want to sell them and mark price down back to a more fair valuation. And I guess to put it into plain English, it just means that if you see a breakout and then breakout retest continuation, this whole thing was institutions resupplying. If you see breakdown, test, drop, this whole thing was institutions selling because they feel like this is too expensive of a price for the security. So anyways, HIMS, clear top resistance level, extremely clear bottom resistance. I mean, to the T. Look at the bottom of each wick, just like exactly on 41-ish. So guess where I sell puts? Not only that, it's a confluence of the 200 SMA. So I've been selling puts at 41, whether the price was here or whatever it was. I was selling puts at 41, hoping to get a sign. Never did. Maybe I could have been more aggressive, right? But that's just kind of how I look at it. And that's kind of where my thing comes from. Like I try to mix investing and trading. So I use a valuation database. I look in there, and actually let me show you guys since we're here. I'll switch my screen. Let me go to, oh, that's crazy. All right, let me go to valuation database. And what I like about Discord is you can have tags and you can filter. So let's just say I want to look at fair value stocks. It just shows me a list of fair value stocks here. And let's just say I want to sell puts on, Amazon. 210 is a fair value of that stock, according to me, right? This is my opinion. Everyone has a different valuation thing, but so if I go to Amazon, preferably I want to buy at 210, okay? Then I look at the chart and I see, okay, the 200 is at 213. That's a good price too. I don't have to buy it exactly at fair value. So I'd like to buy Amazon at 200, maybe 215, but let's just say the delta is like 0.04. I'm not going to get premium for it. Okay, I'm just not going to take the trade. That's kind of how I do it. Oh, wait, you guys can see it. Okay, good, you guys can see that. But you guys can't see that. Oh my God. Let me switch the screen again. There we go. Sorry. Yeah. So 210 fair value, 200 days at 214-ish. I could buy at 215. If I'm not going to get enough premium for it, I just don't do it. Yeah, I do miss out on money like that, but I mean, for me, like Nvidia, I got assigned at 120. I'm still holding that thing. Google, I got assigned 200 shares at 170. I got called away on one. I'm probably gonna get called away on the second one after this pump, unfortunately. But like to me, that's like where how I feel comfortable. Like I don't have to sell calls right away and get called away because I'm like, well, I bought this company at a fair value. Like within 6 months, it's probably gonna like trade higher than that. So I try to only sell calls to like when I feel like the market might drop or, I want to get the cash back and reallocate it or something. So yeah, let me open up chat and look at more questions. How to read and analyze delta, theta, and gamma for SPY. Thanks, Kenneth. Yeah, that's my bad. How to read and analyze delta. I mean, so theta and gamma. Theta is just the measure of how aggressively the option premium will decay as you get closer to expiration. I believe gamma is, I forget what gamma, but delta is typically like the most looked at one. Delta, the most common way to look at it is how likely is that strike to expire in the money by the expiration date. So if you sell a point 0.2 delta, the way you can think about it is like you have an 80% chance of that contract expiring worthless, right? That's not like, some people argue against that like big time, but I feel like that's pretty accurate. Market makers do price the premiums based on their models of probability. So that's how I look at them. But again, I don't really trade based off delta or gamma. I trade based off what price I want to buy the stock at. Which, I'm not saying is right or wrong, but that's just my style. I sleep at night. I have a full-time job. I can't like track all the movements. I just know that if I buy at a price I want, I'm gonna be okay with owning it. Like HIMS, I got assigned HIMS at 45-ish, 200 shares. It dropped below that, but I was fine. I was like, yeah, to me, that's a good valuation for HIMS. And now it's like moving it back up. Do you ever put the premium toward cost basis with the assumption you get assigned? So if 40 is your level for HIMS and premium is $1 at 41, would you sell at 41 or still 40? Also, great question. I I'm a safe boy. I'm a conservative guy. I don't, but you should. Maybe I should too. I should do that too. Yeah, that's more smart, I think. Um, so yes, I think you should account for the premium in your cost basis because I feel like that's a more effective and efficient use of your capital. Um, that's why I like these because I feel like, no one person is the expert. I learn from a lot of different people and I take the valuable from them and then I put it into my own and then I talk with you guys and you guys take what you guys like from me and from someone else and you guys make your own thing, and like that's how we keep getting better and learning. So I do appreciate these questions like that. I don't see more questions yet. But I guess I could just go ahead and cut me off anytime or type if you want to have a question. I'll just go ahead since we have 10 minutes left and go over some trades. So I have an open position on Nvidia. I have 100 shares. I was assigned at 120. By the way, I was assigned at 120 before the tariff drop. I had to stomach that. But um, but again, why I like my method, I knew that Nvidia at 120 was a pretty good price. And I know that if the market does recover, Nvidia is going to be trading above that. Because for me, based off my calculation for valuation, all this period of time here, um, basically it was like from July. I think all this time here all this time, my valuations was consistently like 135 to 140 on Nvidia, like the whole time. The business kept making money, like projections were still going up, even though this was a really tough time for Nvidia. And so I was like, well, if valuation is still high and I'm assigned at 120, even if the tariff drop happens and we go into a bear market, like I'm gonna hold it. And that's why sizing matters too. I had 100 shares. If I had 500 shares, yeah, I would not be so comfortable. I'm like, oh my God, like most of my portfolios in that stock is down like 30%. That means all my cash is down 30%. Like, what should I do? What should I do? But I did have more than one put, and don't get me wrong, I had like two or three, but I closed those for a loss and got assigned one because I felt like, well, based off the technicals I'm seeing, the market could drop a lot more, and it did. And right now, I'm comfortable holding 100 shares. So I took the loss on those premiums, and I held the Nvidia. So I have that one. I stopped selling covered calls on it for a while because I did not want to get called away. I want to hold this thing for I think it's going to go to 200 eventually. I have Google at 170 or 172.50 technically. Um, and I sold a call like I think like right here. I sold a call on Monday or Tuesday, and then the next day it gassed up, and I was like, oh my God. And I only sold the call because I was talking to someone and they were saying, oh, like I saw zero point 0.1 deltas on Google for like a year and I was never in trouble. And you make like 20 bucks a week. And I was like, okay, like free 20 bucks a week, sure. It just goes to show you, like, there's no for sure in the market, right? And like, that's the price I pay. You know, I I would love to get reassigned on Google at some point, but it is what it is. I'm gonna keep rolling. In this situation, I'm just gonna keep rolling for a credit until I can't anymore, and then I'm hoping if we get a pullback this month or October, it's enough to bring it below. I think my strike is at 225. I don't know if we'll do that, but maybe it will. Uber, Uber was a Wyckoff trade. Um, this is the daily chart. Yep. So top of the range. Nope. Right here. Top of the range here. Sold down, formed a bottom of the range, had multiple false breakdowns and breakouts. Eventually broke out, right? Broke out. Damn it. Broke out, tested, and held. Jesus Christ. Okay. Broke it, tested, held. I was buying here, basically, over here. My average basis was 85. My lesson there was I should have been more aggressive on the entry at 82, but I wasn't. So I got a basis at 85, which I'm still happy with. 100 shares. Premium is ass on Uber, so I was not able to sell covered calls really to get premium. But I'm ready to let go of it. So I have a call at 93 expiring Friday. I might get called away, but this is an example of a great Wyckoff trade. And the great thing about Wyckoff is like if you do it if you look for the structure on the daily chart, it takes a long time for it to play out. This was from March 2024 and didn't break out until May 2025. So you have plenty of time to set your alerts, plan how much money you want to allocate to it, you know? And then when the breakout does happen, because it's on the daily chart, you have a long time to manage your trade. Like I started this position back in June and it's still like profitable, there's no like rushed feeling to it. It's perfect for, if you have a full-time job like me. And on top of that, when I saw this breakout and test, the first thing I did too was did a valuation analysis, and I saw that Uber had a valuation of $100, 95 to $100 a share at this breakout. And so that made me feel very comfortable taking a larger position on Uber. That's why I took this trade. I got a question. How do you feel about soaring stocks such as Air, RR, and Open? Are you going to put them in your portfolio? I generally don't. I don't mind trading them. I think trading stocks like that's fine, but investing, no, because my investing style is again like I don't want to think about it. Like the companies in my portfolio are going to be around for another 10 years, and every earnings call, every 3 months, I'll just check how they're doing and make sure their financials are continuing to improve. And if they are, that's fine. Every time market pull back, I'm gonna buy more of those companies like Apple and Microsoft and Salesforce and Google. Um, but I will say, I did talk about AVWAP Q. Another one I use is AVWAP Y. It's the same concept, but you anchor it to the beginning of each year, and you can use that for any stock. And I found that to be very reliable too. So actually, like the coolest example I have is from actually Open and Nvidia. So on Nvidia, if you anchor, I believe it was 2024. So if I go to January 2024, January 2nd, I anchor it there. That literally provided like the best entry for Nvidia throughout 2024. On this pullback in March, it like fell right to it. And then same thing in July of 2024, fell right to it. And I saw that and I was like, I wish I knew about this at that time, you know? So if I go to open, I I swear I thought I put an alert on AVWAP on open and I didn't. It pissed me off because it flew. But this was AVWAP on open, right? So provided resistance and resistance. It was bearish, bearish, breaks above it, and it tests it right here at $1.75. And I was like, oh my gosh. And I looked back and I was like, oh, I totally missed that entry. I wasn't looking at it, you know? And that would have been such a beautiful entry to take it, you know? And on top of that, you get a bullish cycle here too. It would make you more comfortable to keep holding, you know? So that's kind of my opinion on stocks like that. Like generally though, it's very risky. So, and they're very volatile, like 25% moves in one day. So your gains could be big, but so could your losses. You don't want to get wiped out. So it just comes down to risk management. How much money are you willing to lose? All right. So let's just say I was not a dumbass and bought it and put an alert and bought it here. Let's just say I would have put my stop loss maybe below this here. I don't know. So I'm like, okay, $1.50, 25-cent per share risk. I want to risk $200. I'll buy that many shares and I'll hold it, right? I'm not going to go like $10,000 into it because, oh, it's going to pump, you know, with a short squeeze because no one knows that. But that's kind of how I would trade them. But yeah, that pissed me off big time when I missed this. And then hymns is my last position. Yeah, I kind of talked about it already, but basically I was being assigned. At first, I was selling puts at AV up Y, and then when I saw a break below, I rolled them. I rolled them down to the 150 SMA. I felt like that was, if it's going to break down, it's probably going to drop to the 150 or the 200, right? Or the bottom of the range. So I rolled them. I got assigned. I rolled one, and then I manually bought 100 shares, I think, on this day, around 45 something. Then I got assigned again below 45. So I had 200 shares, and I was selling puts down here too. Never got assigned, and now I'm holding them. I sold covered calls on HIMS at 50 because I was seeing that 50 was that 50 SMA and a VWAP E. And a VWAP E is VWAP anchored to the earnings for each stock. So same concept, right? Just anchoring to different points. So to the earnings, I saw like, okay, $50 a share is probably like a good resistance level. And, you know, just blew through it. So same thing as Google, I'm just going to keep rolling until I can't. And, you know, market could pull back and it could close below my strike, or I could get called away and then you'll just sell puts again. But and then yeah, lastly I have open positions on Apple. Apple broke above the 200 SMA. You know, kind of pulled back, never even tested it and rallied. So to me that was very bullish. And so I wanted to basically, you mean you never get a chance to wheel Apple. The premiums are so bad because it's such a safe company. But I was getting like 50 cents to $1. That's like pretty good for Apple, and I'd love to hold 100 shares of Apple. So I've been selling puts on Apple too. All right, and last question. This may seem like a dumb question. No such thing, man. Where do you anchor your AVFQ? Beginning of each quarter, and but that one's only used for market indices. So SPY, like mainly SPY. So if you want to use AVFQ, Use it on SPY. And on TradingView, it's free. Just look for VWAP Auto Anchored, this one. And you can go to settings and you can tell it to anchor it to whatever you want. It's a quarter, a year, or earnings. And it does it for you automatically, which is awesome. So yeah. Thanks for joining. That was fun. Hope you guys learned a good amount. Good luck. This is geez, I don't know. It's kind of weird to say, but I kind of hope you get a pullback. I have like a lot of cash sitting. Maybe you guys do too. But we have time. The meeting's on Wednesday. Most likely, markets won't move before then. So just take the time Monday and Tuesday to really look at your trades that are open and see what you feel comfortable holding. Anything you don't feel comfortable, just close it. Whatever you do feel comfortable with, open it. Plan. If we do get a pullback, what stocks are you going to buy as investments? What stocks are you going to buy the dip on, maybe for leaps? What stocks are you going to sell puts on? Make that list now. You don't want to do it as it's happening. You want to have a plan before. If the market doesn't drop and goes up, well then, I don't know. Wait continues, I guess. But yeah, market's bullish until it's not, right? So just keep a bullish neutral mindset until then. But yeah, no problem, guys. Thanks thanks for joining again, and hopefully we'll do this again soon.